Thank you very much for staying on the marketplace. Welcome back. The Ministry of Food and Agriculture says it is looking to cut down importation of rice and tomatoes by 50% this year. Statistics indicate that Ghana imported $331 million worth of rice as of 2017. The ministry describes the situation as worrying. Speaking to Joy Business at a breakfast meeting held under the theme Opportunities for Ghana-Israel Business Cooperation, Culture, Innovation and Technology, Deputy Minister for Food and Agric, George Oduro, says government is already undertaking farming.
According to figures from the Agric Ministry, Ghana imported over 656 metric tons of rice, amounting to $331.2 million in 2017. In the same period, some 75,000 metric tons of tomatoes were also imported to meet domestic demand. Touching on the issue, Deputy Minister for the Ministry for Food and Agriculture, George Oduro, said government is working to cut the levels of food imports significantly.
Well, this year alone, our target to stop the importation of rice by 50%. That is this year. That's our target. And I'm hoping by the grace of God, maybe we can achieve that or even more. Then the tomatoes too. We are trying by the end of this year to stop the importation of tomatoes. And then, if possible, then export. We are putting measures to stop this importation of food items because the possibility of us producing it here is there. We can. Unless me and you, we come together, show the interest in the agribusiness, and then we can sort out this problem.
The Deputy Minister was speaking at a breakfast meeting held by the Integrity magazine under the theme Opportunities for Ghana-Israel Business Cooperation in Agriculture, Innovation and Technology. According to the Israeli ambassador to Ghana, her government will continue to invest in Ghana's agric sector.
We believe that aid should always accompanied by trade. And so we are investing a lot in capacity building of Ghanaian farmers and Ghanaian trainers. We are holding a lot of activities of training the trainers in irrigation, in the maize, in rice, fertigation, whatever is being asked from us from the Ministry of Food and Agriculture. Now, on the second level, we aim to attract as many agriculture companies from Israel as we can in order to strengthen the commercial relations on agriculture between the two states.
Meanwhile, CEO of Integrity magazine, organizers of the event, Reverend Kennedy Okuson, said developing the agric sector is fundamental to the nation's development.
You will agree with me that agriculture is important. This is key. And we are believing that if we invest enough in agriculture, we will export, be a net exporter of food, at least to the neighboring countries, and that will bring this country foreign exchange. And at the moment, we don't need to overemphasize the fact that the more we export, the stronger our currency will be, and perhaps the more available we'll have foreign currency for those who need foreign currency for industrial work and so on.
For Joy Business, Sheila Tamaklu.
Let's get to one of our top stories today. The local currency, the cedi, continues to have a good run against the US dollar on the market. It started trading this morning at around 5 cedis 28 pesos. The impressive performance is expected to impact positively on many economic activities as the steep depreciation experienced earlier had become the bane of business operations. For instance, the Ghana Revenue Authority last week came out to explain higher duties on imports were due to the impact of the depreciating cedi. This follows allegations by small-scale importers in Kumasi that the GRA was arbitrary, increasing import duties. Let's take a listen to the officer in charge of State Warehouse at the Customs Division of the GRA, Edward Agrifin, who explained duties have not been reviewed but noted charges were pegged against the dollar and other foreign currencies. We sincerely apologize for the loss of sound there, but it is so obvious now that the city's impact on economic activities cannot be underestimated. We want to take you straight to the Central Business District, where my colleague Charles Aite has been all this morning ascertaining how some business operators are viewing the city's current turnaround. Now, Charles, if you can see me or hear me, who have you been talking to and what have they been saying?
All right, so I'm currently at the office of New Lucky Electricals. That's the president of the Ghana Union of Traders Association, who also happens to be one of the main importers here in the country. He's going to be helping us understand his take on the city's appreciation, whether or not they're satisfied, they're confident, and the way forward. Many thanks for your time, Dr. Joseph Abeng, for being with us on Marketplace. So first of all, we've realized that the city has appreciated over the past few days, and it's sustained a little bit. What's your reaction as, first of all, an importer and the president of GUTA?
There is a glimmer of hope. Confidence is gradually coming back. The indicators are very positive. If you look at the message that the finance minister gave, the assurances that he gave that there's going to be an appreciation of the city in the coming weeks, it has actually given shore up this hope. The headline news even of today, the euro oversubscription of the euro bond and all that, are all going to shore up our currency and forex, and thereby going to reduce the appreciation of the dollar. In this case, those who trade in the currency, the dollars and all that, the forex, are bound to bring the monies back into the system. There's a sure way they can't do anything about that. And I'm very hopeful that from next week, by the end of next week, we'd have come back to normalcy.
But beyond this hope, of course, there are some skeptics who say that, the city's appreciation cannot overly be where it is currently. Development both in the internal and external markets could, to some extent, shape how the city looks like. From your perspective, how best do you think we could sustain this appreciation?
Most of these things are bound on speculations. And so even the news that came, those who do speculation are bound to reverse the trend. And so these are the assurances and the signals that I was talking about. So if we are able to provide this hope, that will not give anybody the reason to hoard the dollar and all that, then of course. And then simply, this is a management of your limited resources. So we then have to find a way not to allow pilfering of this out of the system. So once we have it, we have to protect it and make sure that the excessive outflow of the forest is curtailed.
Thank you very much, Doctor, for your time. So that was the president of GUTA, Emmanuel, explaining to us what he thinks in terms of the concerns and the various reactions to the city's appreciation. Two things we could pick from the interactions that we had from him. First of all, speculation could affect the performance of the city moving forward, and second being the issues of hoarding and
all right, Charles,
which he claims must be checked, if not now, forever.
All right, Charles, so one thing I wanted you to ask, the GUTA president is the fact that, during the sustained depreciation period, they threatened to increase prices if nothing was done about the free fall of the cedi. Now that we have a turnaround, is it going to translate into reduction in prices, and how soon should we expect that?
Okay, I think we need to, channel that very question back to him. Dr. Joseph Abeng, there's this issue about, the city's performance and its impact on the cost of goods and services. We've interacted with you before. You stated that based on the performance of the city, you're likely to increase, traders are likely to increase their goods and services. With this current development, where do we see pricing?
It's too early to ask this question because the decrease is negligible, and we can only hope. Let's see the days ahead. And then definitely these are natural causes of business. If the cost of doing business is low, it is bound to affect businesses in lower scale. If it is high, it goes up. And so definitely it will find its level.
So it means we can't premise this recent developments to issues of pricing across the market.
If we are taking the present rate, we are now going to recoup our losses and all that. They are all part of cost, because some people might have changed at a higher rate. Now it has come down. It is also a loss. So it will. They are all bound to be added in costing and all that. So for the short time, we should not expect a drastic decrease, unless this thing is sustained.
Okay, thank you very much, Dr. Joseph, for being there. So, Emmanuel Rafi, so the dynamics to the argument related to the city is very, very diverse. So many people have various views, viewpoints, and of course, assertions to this development. But we shall be engaged.
All right, many thanks for your time. Charles Aite is my colleague reaching us out from the office of the president of GUTA, Dr. Joseph Obeng, and getting his reactions to the appreciation of the Ghana cedi against the US dollar. Still moving on in the financial sector, economist Professor Godfred Bokwin has described the cost of the yet-to-be-issued Eurobond as favorable despite current economic challenges. His comments comes after the government secured far more than $3 billion targeted in its Eurobond sale. George Viafe has more in this report.
Sources say the $3 billion Eurobond will be done in 3 tranches. That is $750 million for 7 years, with the expected interest of 7.89%. $1.2 billion will be spread over 12 years at a cost of 8.1%, an 8.9% yield on the $1 billion spread over 31 years. Professor Godfrey Bobkin tells Joy Business he was surprised by the rates secured, looking at the current developments in the economy.
We fear that it could have been higher because we are approaching 2020 election. But when you look at the rate that we have gotten so far, it looks pretty good. It's fairly a good deal. Don't forget that our credit rating has improved. And then, so the macro level variables are also taking shape largely in terms of fiscal discipline.
According to sources, $21 billion came in as bids for the country's Eurobond, far higher than the $3 billion that government was targeting. Government is planning to use the funds raised to finance some projects outlined in the 2019 budget, some debts that are maturing, and also lengthening the period for paying these debts that have been borrowed to finance some projects in the country.
It's live on the marketplace, and we hear there is a government press conference on the cedi, and we would like to cross over to the venue for some updates now. All right, so before we get through to that press conference, let's stay longer on this Eurobond issue. And Courage Marty, an economist from Data Bank, who is also a regular face on the marketplace, has just joined me in the studio to tell us, to discuss some of the issues surrounding the Eurobond. Now, welcome to the marketplace.
Thanks for having me.
Now, firstly, are you surprised with the influx of investors to this particular Eurobond issue, and especially when, you know, people were quite skeptical, or investors were skeptical because of our exit from the IMF?
So I would say it's a pleasant surprise because, like you said, our imminent conclusion of the IMF ECF program was a major sticky point, you know, for investors, and they were not sure how we were going to manage our affairs without the IMF, you know, and there was this fear that we were going to reverse the fiscal gains and fiscal discipline that we've chalked over the last 4 years. But surprisingly, the yields have, the turnout has been very good. Demand was about $22 billion, and we took the $3 billion we wanted. But most importantly, 2 weeks ago, the benchmark 2049 Eurobond was trading at 9.4%. But then our recent issuance, 2051, was secured at 8.9%.
Okay.
You know, that's lower than what the benchmark was doing on the market. And if you look at what the market is now doing after the pricing, they are doing just 10 basis points below the price.
All right, I'll come back to you, but let's quickly go over to the press conference now where Kojo Oponkoma, the Minister of Information, is addressing the press.
Before we speak specifically to this one, you recall the minorities claim that literally Ghana had been sold to Franklin Templeton in the first issuance of the 2.25 transaction, and all the brouhaha that followed, which was totally unfounded. You recall the minorities claim that the ESLA bond transaction was going to be a failure. And again, at the end of it, in terms of the numbers that came in, that was also unfounded. You recall the minorities' prediction of 1983-like famine ahead of the mid-year budget review of, I think, 2017, which prediction also did not come to pass. You recall the minorities' prediction of an increase in VAT, which also did not come to pass. You recall the minorities writing to the IMF to pronounce that the Sino-Hydro transaction was a loan, and the IMF's response that they declined that invitation because it is not. So this is, may I say, a group that has consistently shot over the bar when it comes to economic analysis in this country. The substance of their presentation today essentially is that the cedi has depreciated and that importers have taken a hit. Now, this is an already acknowledged point, and government has already been working to address the situation. The Bank of Ghana outlined its short-term measures, the finance minister outlined the medium-term measures, and today you are beginning to see a gradual recovery of the Ghanaian cedi. We expect that these recent efforts, in addition to efforts like the successful issuance, as well as some of the other medium-term items that have been outlined, will lead to an eventual reversal of the recent shocks that the currency has suffered. So the cedi is gradually making a comeback, and this minority attempts to take political jabs is a bit late in the day. The third brief that we have for you is that the Vice President, accompanied by his spouse, has completed an official visit to India, where he participated in the 14th Confederation of Indian Industries Exim Bank Conclave on India-Africa Partnerships. He was a special guest of honor for the inaugural session, and he uses that as an opportunity to encourage a lot more investments from India towards Ghana. On the sidelines as well, he held a meeting with the officials of the Indian Exim Bank, led by the President, and at that meeting, government firmed up discussions with the India Exim Bank for the final signing of a 150 million agric mechanization project facility and the 30 million facility for water in Yendi. Now, a few more details. The 150 million facility is expected to provide equipment and training for the various agric mechanization centers and service equipment, or the AMSECs, across the country for easy access to farmers. This will include tractors, plows, and many more. And the Yendi Water Project facility is in fulfillment of the President's commitment to ensure rapid socio-economic development in the Dagbon area. The two facilities have been passed through Parliament, and final signing between government and Exim Bank is scheduled for April 2019. He also joined His Excellency Dr. Ibrahim Fofana, Prime Minister of Guinea, and His Excellency Monyae Moleleki, Deputy Prime Minister of Lesotho, to pay a courtesy call on the Vice President of India. They had fruitful discussions on how Africa and India can partner for enhanced economic cooperation in the areas of trade and investment. Dr. Baumia also had private meetings with the Guinea Prime Minister, and they discussed the possibility of bilateral economic cooperation between the two countries in the area of bauxite and the state-of-the-art bauxite mine. Ghana and Guinea together may control about 70 to 80 of world bauxite reserves. And just like we're doing with our colleagues on the cocoa side, it's important also to engage with those in the bauxite area. Such cooperation will help strengthen the voice of the two countries on the global level and lead to downstream industrial benefits, for example, like we have here in Valco, as we seek to refine a bit more. On her part, the Second Lady also, through her not-for-profit organization, held a forum with the Delhi chapter of the Global Organization of People of Indian Origin. And during this forum, it was announced that the Second Lady, through her foundation, has secured a number of scholarships. Initially, 12 have been announced, and free healthcare services for children needing special pediatric care abroad. He's currently heading to the United Kingdom, where he will, in fact, indeed, he has just arrived, or he's just leaving for the United Kingdom, where he will be the special guest at the Humanities and Law graduation ceremonies at the Buckingham University, his graduate alma mater, and he will also hold some investment meetings on the sidelines of that event. The third brief I have for you this afternoon is to the effect that the Ministry of Information is just about rolling out the 2019 town hall meetings, and it starts on the 29th of March 2019 with a maiden town hall meeting in Kaswa at the Datus School Park. The town hall meetings are designed to bring government closer to the people and shall therefore see state actors such as ministers of state, MMDCs, and heads of agencies give an account to the people, who also have an opportunity to ask questions and make contributions towards the governance of our country.
All right, so that was the Minister of Information, Kojo Pong-Kuma, who has been touting some gains of government in recent times, and also highlighting the Vice President, Dr. Mahamudu Bawumia's visit to India recently. Back to the studio and now to my guest. And Courage, you were talking about the cost involved in this Eurobond issue. What is it, comparing it to previous bond issues?
Well, yes, and I think if you look at the cost, it is the coupon rate versus the amount taken for each tenor, 7, 12, and 31 weighted average life of each of the tranches. Okay. Now, having said that, it is also important to look at the gain side, because whilst there may be a cost based on the coupon rates, 1 billion cedis of the 3 billion will be used to pay off existing debts. Now, the target is to pay off the expensive one, specifically the one maturing in 2030 and the one maturing in 2023. Now, the one maturing in 2030 has a coupon rate of 10.75%. If you use the new one, which has a coupon rate of, say, 8%, to pay off part of the 10.75%, you are definitely going to save, isn't it? So even though on the cost side, the coupon is about 8.9% for the longest maturity, if you use that to pay off the existing one that has a cost of 10.75%, there's a net gain. Okay. Yeah, so at the end of the day, the liability management component of the new Eurobond would ultimately result in a net gain.
Now, if we really had more than we asked for, why didn't we take more than the 3 billion?
Because we are mindful of the implication on our debt sustainability. Okay. So, and again, there is a target. 2 billion is for the budget. So all we need for the budget is $2 billion.
So we want to stay within the budget.
We want to stay within the target.
Why the staggering of this Eurobond sale? I mean, because other Eurobond sales hadn't been staggered. This coming in various tranches. Why?
Well, because you want to take advantage of the pricing along the curve. You know, investors price based on the curve. And so if you find a very favorable pricing at one segment of the curve, you want to take advantage of it. So as you move along the curve, you see the pricing, you exploit the benefits there are. So I would imagine that is why they did this time around three tranches, to take advantage of pricing at the various segments of the maturity.
Certainly this particular Eurobond is going to impact positively on the cedi's appreciation of, against the dollar. What are you saying about the current situation where we're having a remarkable appreciation of the cedi against the dollar?
It emphasizes the argument that beyond a certain point, the depreciation started to reflect panic buy and speculation, right? So that just by virtue of the news coming into the market that some inflows are coming, the speculators are beginning to take profit and dump the US dollar in favor of the cedi. And then the cedi is looking more attractive now and gaining. So this regaining or correction is an elimination of the speculative forces that were built into the exchange rate. And we will continue to see this until we fully eliminated the speculative tendencies within the exchange rate.
So what's going to be the outlook for the next few months? Or quarter?
Well, I think over the next few months, once we have fully eliminated the speculative forces, we should see stability. In fact, till the end of the year, once we've eliminated it and it's gotten to the point where speculation is out, we should see the cedi remaining within a very restricted band till the end of the year.
Many thanks for this incisive discussion. Courage Marte has been my guest on the marketplace today, and this is where we draw the curtains down on this edition. Many thanks for your company. My name is Emmanuel Apuaji. Have a good afternoon.